Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant here, host of the Smart Property Investment Show. I hope you're doing well. I hope you're navigating this current spike in COVID, irrespective of where you are. And got people all over the world listening to this, which I get a real kick out of. It's just not Australians living in Australia. You've got a lot of expats out there making good dough somewhere else, normally with much better tax implications around it, and they're sandbagging money and looking to park that back in Australia. For all of those listeners out there outside of Australia, I hope you're doing well. I hope you're getting on with things. I think it's a lot more normalised, the COVID environment in other parts of the world, Europe, the Middle East. I'm thinking about where expats seem to find themselves in the States and up into Asia. But if you are coming back to Australia, you're helping to drive a very strong property market, all those expats coming back here, pushing a lot of prices up, which has fans. It also has people who aren't very happy about it when it comes to affordability. A big focus for us over 2022 is doing a lot more deep dives, not only with property investors and exploring their journeys and their stories, and that's really popular, but more specific geographic deep dives into markets, how they're performing, the investability of them, things to look out for, things to look for, and some of the nuances around investing right across Australia. You need to remember, and I think back to my year 7 first history lesson, we had to get a piece of tracing paper and trace around Australia on everyone remember that book that you used to have at school, and then put that same tracing over Europe. And Australia pretty much stretches from London to Moscow, east and west, and from Scandinavia through to the bottom heel of Italy, if you go north and south. So it's a big old place, and all those markets are very different, but there is commonality. We'll cover a whole bunch of stuff. I normally get a lot of feedback, most of it positive on the Smart Property Investment Show, but I also get some wags who give me some negative feedback, and often it's around, why don't I talk more about Western Australia, the great Western Australia, the independent nation of Western Australia, and some of the property markets there, Perth in particular. Outside of my particular geographic skill set, I must admit I'm more of an East Coast guy. It's where I'm based. It's where most of my properties are. So I've looked through my Rolodex and found the best bloke I know who knows about the Perth property market, Damien Collins. He's from Momentum Wealth. Back in the show, semi-regular guest. He's also the president of the Real Estate Institute of Western Australia. Damien, how you going? You well?
I'm very well, Phil, and good to see you virtually, since I haven't been able to see you phically for at least 2 years. And haven't seen anyone over East for 2 years now.
So do you guys now have a different colour passport with a different name on it, and, the border openings and closings? Mate, you're more locked up than East and West Berlin back in the Cold War.
It certainly does feel a bit like that. I think if you're a local West Australian and you don't really want to travel anywhere, I think you've lived in bliss for the last couple of years. We've had a very strong economy and almost next to no COVID. I mean, I think we had a 3-day lockdown and a 4-day lockdown over the last 2 years, apart from that initial phase when everyone was locked down. And so borders are opening up. But yeah, it's been, business community's been less supportive, a bit mixed bag. I think we're all now ready for opening up on the 5th of February. And we come back into the fold of Western Australia becoming part of Australia again, which I think is good and well needed. And it's about time we did come back into the fold.
Well, mate, the rest of Australia needs those GST receipts, mate. It's something which...
don't mention the GST. That's a sore point over here. So your Premier, the New South Wales Premier is very unpopular because he wants to lead West Australians of more of their GST. So don't mention that Premier Perrett, or however you pronounce his name, over in the West.
Well, the only way you guys are actually making any dough out there is digging it out of the ground and selling it up to the north. And that's going to be contested moving forward as well. So who knows whether or not the rich resources of Western Australia are still going to stimulate the economy by selling it largely to China, and that's changing as well. They like some of our dirt, but some of the other dirt now they don't like so much. So that might have some economic impact.
Yeah, it's interesting. Obviously, being here we're very much a mining-based economy, and certainly that's top of the list of concerns when you're investing in WA, when you're living in WA. But they've tried to they kill off our wine, and they've tried to kill off our crayfish, but they haven't tried to kill off an iron ore because there's nowhere else to get it from except Brazil. But Brazil provides about 300 and so million tonnes, and we provide 6 to 800 million tonnes globally. So that they simply can't cut it off. In fact, iron ore prices are at $125 a tonne as we speak today in January, and the iron ore companies are digging it out for $15. So not bad margins. I'd love to run a business where I can make that sort of gross profit, sell it for 125 and cost of goods 15. But so look, there really is no short-term alternatives. There is talk of an African mine, but the cost there is $60, $80 a tonne to get it out. It's going to take 5 to 7 years, and it's 100 million tonnes a year. Well, that's going to only put a dent in this, the 8 or 100 million tonnes that we ship offshore each year. So, and also at the moment, Phil, certainly lithium is going crazy. We're very blessed in Australia, particularly in Western Australia. We've got so many different commodities. Iron ore is our biggest by a long way, but we've still got lithium is obviously for the batteries is it's very strong. Lots of discoveries and lots of mines getting set up. Gold's still a very big staple, and nickel and other commodities. So, but yeah, if you're investing in WA, it's a mining-based economy, and it comes with pros and cons. And so not as volatile Perth as certainly as the headland and some of the regions right where the mining towns are. Maybe we'll get to talk about some of those today. But it is certainly got more volatility than your traditional capital cities like Sydney and Melbourne.
Yeah, and every capital city has its own uniqueness and volatilities, and you have them in Australia as well, sort of finance-orientated economies or service economies. But the Perth market, the wider WA market, intrigues me as a student of international politics and realpolitik and some of the geopolitical challenges Australia's facing to the north. And I'll get someone to have a really good chat about this at some point in time. But this is really the intersection between how that influences micro and macro economies and as an application to that property markets. And it's a really intriguing journey you can go down if you start thinking about these implications. And we all know it's probably outside the scope of this chat, but the great sort of power competition to the north of Australia and what will happen with China, what will happen in the South China Sea, whether or not there will be some sort of conflict, how that will play out for Australia. These are the big questions that our political decision makers are wrangling with every day. But as a property investor and thinking of Perth and those people doing it, these are, you can't obsess or absorb yourself with these type of things, but sort of it simmers in the background though, doesn't it, Damien?
Oh, absolutely. Certainly in the last 2 or 3 years, we've always looked at, I think generally in Australia, most people looked at China as obviously a huge economy, a very rapidly growing one, and a place where we can send lots of stuff offshore and make lots of money for Australians, Australian companies, and also the Australian government getting lots of taxes and receipts and royalties. But certainly I feel that the tide has turned over the last couple of years. Certainly seems that China's flexing its muscles a little bit more. Now, whether that comes to anything, I think all parties know that conflict would lead to probably both sides losing out. So whether we get to that point, I don't know. Certainly, they've got to look at it from their strategic point of view. I mean, if Australia turned off the tap to iron ore, their economy is in for a hell of a problem. They don't have the resources their economy would shut down. So I guess that's on their side of thinking. They wouldn't have the ability to produce steel. And
steel is important.
It would have a massive impact on their economy. So I think they're certainly pushing their weight around. And I think they're probably a bit smarter than perhaps we might give them credit for. And while they want to push their weight around, where it would go to that level, it would cause them significant damage as well. They might take back Taiwan or take a bit more territory in the South China Sea, but that economic, it would hurt us big time, but it's going to hurt them as well. So, look, I remember you, Phil, growing up in the 80s and the Cold War. And, Russia was going to nuke us and never eventuated. Calmer heads prevailed. So let's hope it's that way this year as well.
Yeah, and you can't concern yourself too much with it. I know the Australian government is as alert but not alarmed. No one will benefit from conflict in the Indo-Pacific. Everyone knows that as a trader. That's Australia needs a strong trading relationship with China. China needs a strong trading relationship with Australia, not only at an iron ore level, but all the other areas where we trade, education, tourism, but, an eye towards, and it's a big focus for the Australian government now in Australia is sovereignty. So making sure they keep control over those things they can do and be a good global citizen on the other side. So if you're making property investment decisions, I wouldn't be obsessing too much about that particular thing, but it's good to be across it. So Damien, last time we got together was probably a year and a half ago. We spoke about Perth, and it was only at that point in time there was a more than sort of green shoots of recovery. There was simmering sort of, energy in the Perth market. So it's a good chance for us to reconnect and see where that is now in January of 2022 and how that will march forward. We've got to look at it towards the current situation with Perth remaining sort of effectively shut off from the rest of the world. That's not going to be like that forever. You touched on that, and I don't think we need to really drill down too much into that. But let's get into Perth as it is. We'll just go to break beforehand. Stay with us. We'll be back in a moment.
Looking for a blue chip Gold Coast investment property, or trying to relocate to the beautiful sunny Gold Coast but keep missing out on the right properties? Maybe you need an expert on the ground to source the right property for you. The Srama Group are the leading recommended buyers agency specific to the Gold Coast, providing their clients with exclusive off-market property opportunities, specific insights into market, combined with a large network of dedicated professionals to ensure you make the right decision without the hassle. Get in touch with us at thesramagroup.com.au and secure your financial freedom today.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investor Show with Damien Collins from Momentum Wealth, also president of the Real Estate Institute of Western Australia, and probably one of the biggest vocal advocates for Perth property, but also a very sensible approach as well. Momentum Wealth, I'm familiar with the business. You buy property right across Australia. You just call Western Australia home, and therefore within your sphere of influence. There's still other great places in Australia to invest in outside of Perth, but today we'll just concentrate on why Perth. What's been going on, Damien, over the last sort of 6 months to 12 months in Perth? You can just give us a bit of a catch-up to the status quo right now.
Yeah, thanks, Phil. So we've really had a pretty strong, certainly calendar 2021 in totality was a really solid year for Perth prices. The CoreLogic are reporting it was 13% growth over the year, which was amongst the lowest of all the major capital cities. Certainly the feeling on the ground from agents is that it was closer to 20%, which is good growth. Now, Perth was coming off the back of about 5 or 6 years of pretty miserable conditions, just a slow, steady decline. Not rapid, but it was painful. It was it kept, it would flatline and you think, well, maybe we've reached the bottom, and then it would have another leg down. And it was just related to that oversupply we had from 2014-15. So right now we're sitting in a significantly undersupplied market, and we've got about 8,500 properties advertised for sale on REWA.com. Now that is well below what we would consider a balanced market of 13,000. Our rental vacancy rate has just hit an all-time low, 0.7%. That's the lowest we've been tracking at REWA for 40 years, and that's the lowest figure we have. So there's simply not any properties around, or enough properties around to go around for people to get into a home. And the real challenge that we've got is we had through COVID, we had a lot of expats returning internationally. We had obviously West Australians who went over east, decided to come back. And so we had population growth, unlike Melbourne, obviously, where there was a mass exodus, and Sydney also to some degree, there was actually a population increase. And so the government put in place building grants in 2020. And that's all very well and good. And the federal government did it as well as the state government. And the problem is when you have a 5 or 6 year downturn, it's the longest and deepest downturn, the building industry was decimated, lost so much labour. And and of course, the mining sector was picking up. So a lot of people would say, well, I can earn 100 grand or 80 grand a year being a tradie on a building site, or I can get 140, go up north, and it's a hard slog and a hard shift. And so we just can't build the houses. A home that used to take 9 months to build is now taking almost 2 years. And I certainly think when the borders open up, that's going to be problematic. We just won't have enough housing. We can't get enough supply in the market. And that's going to certainly, I think, fuel further price growth in 2022.
It's a big challenge because I know a lot of East Coasters have an eye towards the West as for lifestyle opportunities and employment opportunities, particularly trades. We all know now building something's 30% more, 40% more expensive in materials, and you can't get the labour. Therefore, it's a 9-month build is a 2-year build. There's a lot of costs connected with it. But trying to attract East Coast people out the West Coast, tradies in particular, is a detrimental effect on this side as well. Good luck getting the trade on this side of the continent. And these are all the things, complicated aspects of the market in Perth. That's good to see those growth, whether or not that 13% is accurate or not. Might have been skewed at some different levels. Who are you seeing is buying out in the West right now, in particular Perth? And I must admit, Damien, over the Christmas break, I watched a fair bit of Outback Coppers up in Kalgoorlie. And, to your point about going off the trades and going in and spending some time up in the mines, it's a hard life. I reckon you've probably got a couple of years in you before you're burned out with that sort of stuff. So are they the people buying property, those mining workers buying property and driving up prices in Perth at the moment?
I think, Phil, it's been across the board. We saw people taking that opportunity to upgrade. We've seen upgraders really active, and they're driven by interest rates. They've certainly you can't quite get a loan now for 2%, but not far off. There's an owner occupier, and people going, if I borrow $1 million more, that's 20 grand a year in interest. That's $400 a week. So people are taking that chance to upgrade from $1 million to $2 million or $750 to 1.25. And the economy was strong, wages were good. So that was certainly the front runners. And then as the rental market got tight, the first home buyers became really active. People going, well, why would I pay $450 or $500 a week rent when I can buy a home? It's going to cost me $250 in interest payments. So we certainly had a very strong first home buyer market, 40+% of the market. When you look at, I think Sydney's closer to 15% first home buyers. I think that's healthy, that you've got people feel they have a choice to get into a market, whether to rent or buy. There's no, some people obviously gripe when prices go up, but reality is it's a very affordable place to buy homes. So, and just now in the last sort of few months, we're really starting to see investors come back in. Now, they haven't come back in at 100 miles an hour just yet. There's a couple of reasons why they're being a bit cautious. Firstly, the East Coast people and internationals. So Singapore is often a dominant share of our market. Malaysia, East Coast, because they haven't been able to come here, that certainly put off people, and they didn't know when the borders were going to open up. So I think that will play out more in the second half of 2022. As even if people don't want to necessarily come and see it, they want to feel like they can come and see it. And right now they feel they can't. So that will certainly start to pick up. Locals have been a little bit more cautious, and there's two reasons for that. There is the long downturn we had. So people, I'm sure, and you've studied investment psychology, and the people's most recent experiences tend to frame their outlook for the future. So when a market's been bad for a long time, it's very hard for people to switch and think, it's going to be good. And secondly, they haven't had the equity. Though most investors, as you would know, Phil, they get the equity to buy the next one from the equity in their other properties. And when you've had a market that's gone backwards, people haven't been flush with equity in their properties. And then we had the government moratoriums. That certainly didn't help. We had the state government said, well, you can't kick tenants out, you can't put rents up. And I get why they did it in the first 6 months, because when COVID started, no one knew what was going to happen. But then the second 6 months we thought was just way over the top, and it put investors off. And so we're certainly starting to see a lot more inquiry and activity. In fact, certainly in Momentum Wealth, the investor activity has really picked up and in the last few months, but that's off a low base. So if investors, which has been probably the weakest leg of the upgraders, home buyers and investors, if you look at it in three categories, first home buyers, upgraders, investors, then if investors do come back, and I can't see, I suspect they will, considering how strong rents are and the low vacancy rate, then that's certainly going to push the market up another leg in 2022. So, and the rental yields are very, very strong. I mean, we're buying properties in Perth around about 5% gross yield, and it depends on the areas. Some you get a little bit more, some you get a little bit less. I look at that on a yield basis, and versus Sydney, Melbourne, it's in the mid twos to high twos. That's a decent chunk of extra return, 2 and a bit % over and above, let alone obviously capital growth is critical to residential property investing. But certainly that cash flow, I mean, most, if not all, the properties we buy now for clients are positive cash flow from day one. And, I'm talking about houses 10 kilometres from the city. So it's certainly fundamentally pretty compelling as to why investment property in the moment in Perth looks pretty decent.
Yeah, it's, this is market cycles, and you see that happening quite a lot where you've got upgrader activity and you've got first home buyer activity. Typically, the investors keep an eye towards that and they go, hang on a second, something's happening over here. We should have a look at it. And then investors get in the market. Every market needs to be healthy to have investors operating within it. It's only when it's a bit of a double-edged sword, when you get too many investors acting and operating in one market can skew it a particular way. And then that sort of gets the eye of the regulators and intervention happens there. So it sounds though investors now are looking towards Perth as somewhere where they can, number one, get good yielding properties, but the longer term capital growth. And let's admit it, Perth's been waiting for quite some time for a significant uplift in its capital growth. What is it, do you think, sort of outside of those nuances, that's really attracting investors to the Perth market? it's pretty expensive to get a joint out here on the East Coast now. No doubt affordability is probably a driving factor.
I think people are, when we get inquiries at Momentum Wealth from investors over on the East Coast, obviously, generally they're looking on the websites and fishing around, but they're quite shocked that you can get, houses on a 600 or 700 metre block within 10, 15K of the city, and you can get them for $500,000. Like that's just you unheard of, and you'd be lucky to get an apartment for $500,000 within 10Ks of the Sydney, Melbourne, let alone a house. And so I think that resonates with people when they look over this side of the country. They're interestingly, look, I met Perth, and unfortunately most investors tend to follow the herd. And I'll never forget when I had the most inquiries about Port Hedland and Karratha in 2011 and 2012, and that was when those markets were going stupid. We were already out by then. We said, don't go anywhere near it. It's a bubble of massive proportions. And that was when I had the most inquiries, particularly from the East Coast. People go, oh, well, I want to get into Hedland, I get 2,000 a week. I said, well, that's not sustainable. It's not going to be that way forever. I mean, you're in the middle of a desert. There's plenty of land out there in the desert, and it's going to come down eventually. And how much? And certainly wouldn't have predicted how much it came down. It came down 80%. Yeah. So we bought up there in 2019 and 2020. We bought well over 100 properties up in the Pilbara region, because we bought properties for 135,000, now worth 270, because the replacement cost, they came so far below replacement costs. So certainly I think a lot of investors tend to, if you're going to make money, and as you would know, Bill, if you're going to make money in property, you can't be following the herd. By the time everyone says it's a great place to invest, well, you've probably missed a fair chunk of the boat and of that growth, and missed the boat on the upside. And I think certainly feel optimistic here. We're sitting in a market right now where you're looking at the CoreLogic data. A median price in Perth is $528,000, and Brisbane is $680 or so, $680,000. Hobart $680 or so thousand. Adelaide's $580. And Perth sitting marginally ahead of Darwin, but $528. It doesn't stack up economically. And now with the construction cost rises, replacement cost is going up. And to me, when you look at it logically, and Perth's got a much higher income than, in fact, we've got the highest income of any state in the country except the ACT, or state or territory. When you look at the income being much higher than even Sydney and Melbourne on average, and yet our prices are $160,000 below Hobart and Brisbane, and even 60, 70,000 below Adelaide, that doesn't stack up to me. So that gives me confidence that I think we can well and truly in the next, whether it's 1 year, I hope it's not 1 year because that'll be too fast, too quick, but I think certainly in the next 2 or 3 years, we could see the median price go from 520 to certainly into the mid to high sixes, which will get us a bit more around parity with Brisbane, which is where we should be. We should be around, and we should be a decent chunk ahead of Adelaide. Adelaide, much smaller economy, much smaller population, and not as strong as economy as over here. And whereas Hobart's just it's a whole story in of itself. And of course, Sydney, I think you're 1.5 million in where you are, Phil. So we'll never be that. We shouldn't be that. And I think that was the problem. We got too close to Sydney 12, 14 years ago. We shouldn't be. If we get anywhere near like that, that's a bubble again.
But bubble again. And speaking of bubbles, and I think about 10 years on now of some of those poor headlands, those single mining towns, people who are entering those markets at those numbers, that they would still be carrying those properties right now at negative equity, and probably carrying it for about another 20 years, 30 years. It goes to show you've got to invest at the right place at the right time. And you raise a really interesting point there around true value and is there a value gap? And what you're talking about there in Perth is that one way to look at valuation is the valuation gap between a benchmark between Perth and Brizzy. They're probably a pretty reasonable benchmark, I would argue, maybe Adelaide as well. So on that basis, inherently, there should be growth in the Perth market. That's just an assumption. It's hard to put some science and maths around that, though, because we all know property markets move in mysterious ways.
Well, you're right, Phil. I guess that's just one benchmark that we look at because, as you said, we buy nationally for clients, and a lot of our clients, Perth-based clients, typically still like Perth. We obviously talk about the pros and cons of investing in your own hometown, but right now, in terms of valuation relativities, as I mentioned before, 528 in Perth, 680 in Brisbane, 680 in Hobart, and 580 in Adelaide. That doesn't compute now, so logically, but of course, it still comes down to demand and supply, right? We can be the cheapest place in the country, but if we have a mass exodus of people and their economy is tanking, well, it doesn't matter how undervalued we are, we can stay undervalued and potentially become even more undervalued. But the other fundamentals to it are our unemployment rate is right around 4%, the lowest it's been in 20 years. There's 60,000 jobs that industry can't fill. There is really, really strong. The economy is really, really strong, and wages are going up. So those sides suggest to me that once the borders open up, it's not going to be easy. And you mentioned before the East Coast economies, and particularly trades. Historically, trades we've been able to pick them from New Zealand and Sydney, Melbourne, other places. If their market's a bit softer, we say, well, come over here for a couple of years and while the going's good and work on some building sites. Well, yeah. That's not going to happen very easily at all this time because there's plenty of work over other locations. So fundamentally, the economy is strong. That's on the demand side. Population growth will continue. We do have a supply shortage. And the other thing is replacement cost is bumped up 20-25% at least. I'm in my other hat on in my funds management arm. We do a lot of development work over here, and costs are up 25% to build an apartment. Houses, talk to my mates in the building game, and they're saying it's what a house used to be 200,000 a build is now probably 250. Yeah. And so if people go, well, why would I pay that for an established property? I can go and build one on the outskirts. Well, for cheaper, well, the land's up 10 or 15%, your building's up 20-25%. That $420,000 house you could build 18 months ago is now $500,000. So that affects certainly the cost and the on the fringe impacts the established market because people look at that trade-off. So all those things fundamentally point to me that we're going to have another couple of good years, and I certainly think we can. We sit somewhere closer to Brisbane, well ahead of Adelaide. Closer to Brisbane is in the relative fundamentals of where we should be, and we're a decent $120,000, $140,000 away from that number.
Yeah, it's now looking to, and you talk about sort of those positive points around economic growth for Perth moving forward, and largely I concur with all those points you make out. It's always hard sort of benchmarking relativity around valuations, but it's one way to do it, and it's a good way to do it, and I'm sure you can go and look at other ways to look at valuations. You can probably come up with very similar numbers as well. It's just what's really going to accelerate now the Perth market. And for me, sort of getting a feel for real estate and how I like to buy and sell real estate is you can typically tell by how agents are acting and operating at any given time. I remember I was out in Perth for one of the big events that Momentum Media does, the Better Business Summit, probably about it's got to be 4 years ago now. And every single agent had their chest was slumped, the shoulders were slumped, very Chicken Little. It wasn't a good time to be a real estate agent. If I jump on the ground or get on the ground there now, if I actually could, into Perth and spoke to some agents, have they got a bit of a spring to their step, Damien?
They certainly do, Phil. Our volumes last year were in that downturn. On average in Perth, we're selling 600, 620 properties a week. We're well and truly over 1,000 a week once we get out of this Christmas. So that's when you're looking at 400 up from, it's a 70% increase or thereabouts. So, we had a rework Christmas party and in December, and there was lots of smiles and lots of very happy agents who are making good money again. And it's always a much nicer and easier story when you go and tell your vendor that your property is worth more than they thought, whereas for the previous 5 years they've had to talk them down, and people go, no, I need more than that. And so it's been a challenging time in the market, but agents are pumped. They're pumped. And already we're first week, like we barely missed a beat over Christmas. I know where I live, out near the beach. I've seen 5 stickers go up and sold signs, and these are all multi-million-dollar properties in the last week and a half. And now volumes, we're up to 8. I think 880 was this week. Normally in Christmas, January, people are on holidays, but this year we literally had about 8 days of quieter times between Christmas and New Year, and it's come straight back roaring. So, talking to agents even this week saying, bang, it's back and ready to go again. Yeah,
and as a buyer's agent, no doubt the paradigm has changed where you're probably getting phone calls from agents going, hey, I've got a great property for you here. We can get it at a really good price, et cetera, et cetera. Are agents returning the phone calls of your buyers agents now? Or because normally that's a clear signal whether or not the markets are shifting when they don't want to take your phone calls.
Yeah, I know that they're pretty good because that we have a good relationship with sales agents because, we bought 1,000, 1,500, 1,800 properties over in Perth over the last 8 or 10 years. So they like the fact that we bring them a qualified buyer. We always make sure people are finance ready, and selling agents generally, the vast majority of them, 95+% say, hey, you've got a buyer. I don't have to deal with them. I can just have to deal with the seller rather than normally going down the middle. And we get good heads up on what's coming. Occasionally you still occasionally get off market, but a lot of people now are taking them to market. I don't blame them, right? In this market, when there's lots of buyers out there, why wouldn't you want to take it to market? But
makes sense. So, and what are your buyers agents like? What are they seeing? What's investable stuff out there now?
Well, we're still, because of what you can get for your money, we're still very much focused on houses. So in the Perth market, unless your budget's in the threes and 300 to 400, you don't need to go into the apartment space. Certainly when you get in the 400s, you can generally get houses now, and particularly when you're 500 plus, there's no problem. And that, look, ultimately my philosophy on property and investing is that the yield is important and it helps you pay the bills on the way through, and depreciation's good and it helps you with cash flow. But if you're looking for a long-term investment in property, and it's for most of us, in particularly in our 20s, 30s, 40s, and maybe even to early 50s, it's capital growth is king, because that's how we leverage into more properties and build our portfolio. Now, when you get to 50s, you might be starting to focus on, well, maybe it's income focused and less concerned about capital growth, because I might just want to get an income stream to live in retirement, quit my job. But certainly in your early days, when you're building your wealth, you need that capital growth, and you're going to get more from a land-based investment. That's just economics 101, and I'm sure everyone's seen that. Now, apartments do have an implied land value, but generally in Perth, you'll find it's fairly low. It might be 15, 20, 25, 30%, perhaps, depending on the apartment. When you buy a house for 500, you may well find you're buying the land worth 75% of that. It might be, it'll be hundreds and hundreds of thousands, and the building might be only 25%. So that's a good metric. Well, generally we try to stick to at least 50. Now, some clients will say, well, I can't deal with the repairs and maintenance, and if it's 30 years old, I'm going to freak out. So we'll get something a bit newer, but generally not brand new. So certainly in Perth now, the focus is generally going to be for growth investors. It's different if you're a yield investor, but if you're a growth investor, focus on growth and making capital gains, then certainly I'd be going for houses, because there's plenty of them around in that, but that particularly that 400 to 600 range. You can go further and further out and still get them in the 300s, but not as necessarily a great investment area. But if you've got that sort of budget, 400 to 600, I'd be sticking to houses for sure.
Yeah, and sort of looking at sort of ongoing performance 2022 and 23, I just want to get into that. Let's get another break, Damien. Stay with us, everyone. Back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. Phil Tarrant, Smart Property Investment, Damien Collins, Momentum Wealth, and President of the Real Estate Institute at WA, flying the flag for WA. Sounds like it's a good place to be now after a period of time when potentially not great for investors. Sort of top line from a Momentum Wealth point of view, but also as a collective voice of the real estate sector in Western Australia. If you're going to identify 2 to 3 main themes from 2022 into 23 and 24, remember we've got a federal election this year, whether that's going to do anything, who knows. What's the read of the real estate profession out in WA, Damien?
Well, we certainly think we're in the early phase of a pretty decent growth cycle. That's the theme that people are, and buyers, lots of properties are getting multiple offers. So I think the real theme for 2022 is that we're forecasting at REWA 10% growth. I wouldn't be surprised if it did a bit more than that. And so it's continued growth we're going to see in 2022, fueled by all the things we said earlier in the podcast, the fundamental demand, the shortage of supply of housing, and population growth, and in the replacement costs having gone up so much. So I think it will be interesting, though. We will see in the next few months, there is potential for a little bit of a plateau. And because people in Perth and Western Australia aren't really sure what COVID is. We've seen it on the news. We've heard about it around the world. But I think we're up to, in total, about 1,400 cases in total out of 2.7 million people. Obviously, we're watching New South Wales, Victoria, where they're 20, 30,000 a day. So that's going to be a bit of a shock in the short term. I think we'll probably see 8 to 12 weeks people get nervous about it. Oh, what's happening in the world? And then people will go back to normal, and life will go on, and people will continue to buy property. I think the other theme is speaking to a lot of agents and seeing it in our own business at Momentum Wealth is the investors are really now starting to line up, not only domestically, but in Western Australia, but also eastern states. And we are getting some queries from offshore as well. And I think you'll probably see more of that in the second half year, but the return of the investor, our investor share of the market has been circa 18 to 20% of buyers. Now, and normally you would expect investors to be in this sort of vacancy rate, this strong a market for investment. You would normally see that 35, 40%. And we have seen that over East. So if you had another 20% of the market, 20% more buyers coming in, that's really going to throw some fuel on the fire. So, and we're all hoping, Phil, we know we can't control it. We're hoping for a sustainable and steady growth period. What we don't want to see is the return to silly times of 04, 05 and 06, because then you get a 10-year hangover. Now, the prices then went up more than doubled in 3 years, so we're nowhere near that, and our prices now are only just getting back to where they were in 2014. But we do see a more sustained growth. I think over the next 3 or 4 years, there's easily 25, 30% growth, and barring any economic shock, of course, that we can't foresee. So, for people looking to get in, you didn't buy at the bottom, but the bottom was 15, 18 months ago. But when you look at potential upside, it's still pretty strong. And while you're on the journey, you're getting a positive cash flow from day one at almost every property that we buy.
Yeah, and that's sensible investing until you point around a potential plateau when the realism of the COVID environment hits WA, and there will be an acceptance some point of view where they just got to open up and get on with it. For a lot of buyers, that might be a time when they put the shutters up and isolate and don't want to do anything, metaphorically. Or for the smart investors, no doubt, they'll see opportunity in that as well. That's where there might be some good buying. And for those sort of interstate investors, Damien, it's a long way to Perth from the East Coast. And, to try and manage a property remotely, very, very difficult to do so. No doubt you see a lot of East Coast or outside of WA clients. You've got a property management service as well, right?
Yeah, absolutely. So the goal when we set up the business was to always provide the service for investors so they could have their entire asset taken care of. So we do the property management as well, and for locals or people who want help, we've got a finance broking arm as well. So that works for a lot of people, particularly people who there's always a certain amount of the population who want to be do-it-yourselfers, and that's fine. But there's plenty of people who see the value in using a buyer's agent and takes all that headache off and manages the entire process. So, look, the laws are a bit different in Western Australia. It's a bit more intensive in management that you've got to do than over East. But the traditional property management service, like what we provide, we pay all the bills, the rates, taxes, pretty much for investors. There's not too much to do. Organise the maintenance, do everything. So really it's just... and the good news now is, Phil, that I know in my own portfolio that obviously my team manage, every time a rent review comes up, it's going up. I'm like, another one I got yesterday up $35 a week. I'm saying, oh, that's nice. Yeah. And I said, I'm happy. Yeah, it's smile. Puts a smile on everyone's face.
$35 in your back pocket, you can't complain. And for those East Coast investors, or for those investors who aren't that familiar with or they haven't been investing in the Perth market, you got to expect to pay a few more bucks when it comes to your management out there. It's just universally, that's the way it is. So don't think you're going to get the same management fees percentage as you get the East Coast and the West Coast. Expect to pay a few more.
You do pay more here. And look, it's the service levels is a lot higher, in that the property managers take care of everything. And I often get people saying, "Oh, gee, your fees over in the West," and it's not just obviously us; it's all agents. I wish I was making a massive profit margin. I'm surely not. I'd speak to my East Coast contemporaries, and I think I'm making lower margin on the business. It's just we do 4 inspections a year versus in Sydney, Melbourne, you might do 1. So yeah, the service level is high, but nonetheless, it's still, in terms of context of overall rent, it's still generally a small price to pay for
peace of mind.
You'd
be mad trying to do it yourself personally.
Oh, yeah,
I don't want to. I'm obviously very pro property management. That's pretty good going, Damien, mate. We've covered all the ground. Thanks for checking in and give us an update on the Perth market. Personally, I feel a lot more informed. I've got a big sort of question mark whether or not within the Smart Property Investment portfolio we go to Perth. I just don't know. From an investability point of view, it all makes sense. But no doubt for a lot of investors, you've got to make that mental mind set shift to be borderless in your investing. Just because you can't get out there doesn't mean that there's not people there who can do all the hard work and heavy lifting for you.
Oh, absolutely. My philosophy is that you invest where the greatest opportunities are, and certainly in Australia, we've got 6 or 7 big capital cities. There's lots of regional markets as well, and it depends on people's risk profile and what they're willing to do. But ultimately, if you buy in a decent market at the right stage of the cycle, it not only does it set you up potentially for life, Phil, it sets you up for your next investment, because that is where you're going to get your equity to get into your next one. So certainly encourage all the investors listening to the podcast to have a good look around, because that next investment could mean at the back end of your portfolio could mean you might get 8 or 10 properties instead of getting 2 or 3 if you buy.
And that's a big difference. And the point there is, make sure if you are new to investing that your first investment is a good investment. There's a lot of people there who are still dealing with a hangover of their first investment being in Port Hedland back in 2011, 2020, 2012, when they probably spent 700 odd grand on a property that's probably worth today a couple $100,000. You're not getting wealthy doing that sort of stuff.
No, that's exactly right. Having said that, we bought 140 properties or thereabouts up there in the last 12 months, and made a mozza already. So
at the right price, the right sustainable price. Just before you go, Damien, it's sort of a sort of thesis I'm sort of developing and chatting with people around. Just the accelerating factor of COVID shaping the way in which Australians choose to live, and I think this is an intersection of significant advancement in technology and COVID sort of happening at the right time. The way in which we work will forever be changed. The idea being, my idea is that striking distance, properties within regional, rural properties within striking distance of the CBDs will be good markets moving forward. And that lends itself to Sydney. And by there, I sort of think Central Coast, Wollongong, or the Blue Mountains and the areas they're in. You can commute to the city if you have to, 2-3 days a week, you can do it. Otherwise, work from home with technology to support that. Same applies in Melbourne, Brizzy sort of. What's it like out in WA and Perth? Does the same apply, do you think? Is there that sort of those regional markets out there which are a similar vein, more lifestyle orientated stuff?
I totally agree with you, Phil. I think the new norm is for office workers is, depending on what suits them, but you're going to have a lot more flexible work. We've done it with our businesses. You've done it with your business. That people are going to work from home 2, 3, maybe even 4 days, depending on the business and their role. So that means traditionally in Economics 101 says people willing to pay more for properties used to be closer to their workplace, which for a lot of people is the CBD or near CBD, because I'm saving petrol, I'm saving time as well. I'm travelling 20 minutes a day rather than an hour and 10. But now when you're not doing an hour and 10 every day, it's which turns out to be 2 and tends to be 12 hours a week. All of a sudden it's 2 days a week, it's 4 hours a week. Suddenly the cost of moving a bit further out into a better lifestyle, and then you get much better bang for your buck, makes sense. So now Perth is a bit different to Sydney, Melbourne in particular, where you've got an hour and a half. You've got your Ballarats, your Geelongs in Melbourne, your Central Coast in New South Wales, Wollongong, where that's sort of by fast train an hour to 2 hours away. We don't have really. We've got Bunbury as our closest major city, and that's a good 2 hours away. So I think that those locations, when you start to get that hour and a half plus away, as you said, exactly what you said, where they're in striking distance of a capital city, where if they have to come in those couple of days, an hour to hour and a half, maybe an hour and 3/4, they might suck it up. But if 2+ hours, like in Western Australia, Dunsborough, Margaret River, beautiful part of the world. But if I'm coming up 2 days a week, that's 3 hours each way. It's not going to happen, right? So what we have seen already, certainly Wannanup, which is a part of Mandurah, that's been one of the top performing suburbs on the canals, the waterfront, down that way, beautiful part of the world. We're seeing that as one of the top performers. So I expect that, and certainly from our business model point of view, we are certainly expanding the areas and that we're buying in. So if you're going to be an hour and 10, hour 15 away from the city, it wants to be a great lifestyle location. There's no point going out just to a suburban, like in Melbourne, for example, out in Cranbourne. Okay, it's a nice area, but it's a nice area and all, but it's a long, long way out, and it's not necessarily renowned for its lifestyle. Whereas you go to Geelong, you got the waterfront areas. So I think I would, we certainly look at it this way nationally when we're buying now. We're looking into locations that are in that striking distance with the CBD, have an amazing lifestyle. People are willing to travel a bit further because when they do come home and then the days they're working from home, they've got that amazing lifestyle. So I think, COVID and technology has really changed the property market. 20 years ago, would you buy from that far out, you go, no, it's too far. People aren't going to spend the money to travel in every day, but life's changed. So fundamentally, yeah, that is going to change the property market, and great lifestyle locations with that connection to a CBD are going to perform very, very well in the next decade.
Yeah, and this is attractiveness of these sort of regional, semi-regional, rural markets now, there was really the haves and have-nots, or you're either a capital city person or you're a regional Australia person. Regional Australia now is very, very different. So I think you're going to see a lot more people exploring those type of places rather than just being blinkered to the capital cities. And I include myself in that as well. I didn't really go to regional once upon a time, but now with this sort of seismic change in the way in which Australia is going to advance into the new the 2020s and into the 2030s. Change your mindset. Go and have a look around it. You do a lot of investing in these sort of I don't know what we'd call them. We'll come up with a proper name for them, but these sort of striking distance type areas. Are you active in those markets at the moment?
We are a little bit for the right investments, particularly in the Perth market. We're still
pretty close to CBDs.
You're still going to get with, as I said earlier in the podcast, you're still going to get within 10 to 15k radius. You're still going to get a great house and a great location. But certainly our approved suburb list has changed, and more and more people now are starting to consider it. When you can buy a house so cheaply in Perth, they're still traditionally sticking to the established areas. But look, it's not going to be an overnight sensation, but I certainly think if you're looking for outperformance, and particularly if your budget's lower, you look at what you got to pay in Sydney. You can go to the Central Coast, and we're in Melbourne. Geelong and Ballarat. I know they've both gone up a lot, but they're still a lot cheaper. So if your budget's a bit lower, certainly have a look at those locations.
And if you sort of a little bit further, and I'll close with this question, Damien. I'm conscious of it sort of dragging on, but I like talking about Perth and to you. If you're sort of a little bit more sophisticated as an investor and you've got a good foundational portfolio, you're not really looking for more meat and potatoes, foundational assets, established places with good yields and still good cash flow potential. If you want to sort of start dabbling in that development, smaller sort of development stuff, infill stuff in Perth, those opportunities there?
Yeah, definitely. We're part of our Momentum Wealth arm. We do development management. So it's the whole process, basically find the site, do the development management and get it built. And we've got probably a good 15, 20 East Coast investors at the moment we're doing that for, where they want to come into the market. And generally they're holding them. Sometimes they might sell some, but generally they're doing 2 to 6 villas or townhouses or even a small apartment block. And the good thing of that is obviously they are getting it at wholesale prices. For the newer stock, they're getting the depreciation, but villas and townhouses particularly still got a decent chunk of land value in this. You still got opportunity for good growth. And there's certainly those opportunities. Obviously, you got to have it wouldn't be your first investment. Development does carry risk, and so builders can go broke. A lot of things can happen, and it's obviously something we try to and do manage, but there's still risk to it. You can't eliminate all risks. So certainly for those who've got a decent portfolio, it's worth thinking about getting into small scale development. You pick up that equity initially already on the way through. You've already created that own equity, plus you get growth in the market, plus a good rental return. So not for everybody, but someone who's got a decent portfolio, development is certainly something to have a look at.
All right. Well, maybe we can do a bit of a deep dive on that during the year, mate. I'm quite keen to see how that is. You've been very nice with your time and your information, your intelligence there, Damien. So thanks for sharing that. For those East Coast investors, if you're thinking about looking towards Perth, and you go and tune in. There's been a number of investor stories we've done on the Smart Property Investment Show over the last couple of months of people buying in Perth. And if you're doing that, come and have a chat with us, editor at smartpropertyinvestment.com.au. You're happy to get phone calls from the East Coast crew looking to invest out west. What's the best way for them to connect in with you guys, Damien?
Look, best thing is jump online. We're momentumwealth.com.au. Just type that in or Google it, and it will come up. Have a chat to one of our team. We certainly can give you a good idea what you can get for your dollar in the Perth market, where the opportunities are, and certainly if you're interested in investing, we've got all the resources and capacity to help. Whether you want to just buy and hold, or whether you want to also look at development also. So we're more than happy to help, and hopefully not too far away, you will actually, if you want to. A lot of our clients don't come over. They're happy for us to manage it. But if you do want to ever come and visit your property, the borders will be down and you can actually do it.
I might come in and have a little nose around myself at some point, Damien. You can just give me I like the ground truth,
just make sure your passport's updated, Phil. I'm joking. No, you don't need a passport to come here.
Nice one. Damien Collins, Managing director. Managing director is correct? Momentum
Yes.
Wealth?
Yeah,
Yes,
that's
Managing
me.
Director of Momentum Wealth, President of Real Estate Institute of Western Australia. If you don't know what they do, just Google them. It's a advocacy body for the real estate sector, trying to make sure that the conditions for buying and selling and operating inside the profession of real estate is as best as possible. Go and check them out. I hope you enjoy that, everyone. Lots of chats like this, and you'll see a lot more moving forward, deep dives into these different areas, regional, capital cities, all that sort of stuff. I'm sometimes light on the numbers, but the guests I'll bring in are obviously heavy on the numbers. So I'll try and give some interpretation of what it all means for property investors so you can make more informed investment decisions. Remember, social media, you can find us, Smart Property HQ, tracks down there. Favour for me, please. The team get a real kick out of it. Keep those reviews coming wherever you're listening to this particular podcast. It's pretty cool. The algorithms and all this magic that happens, the more reviews, the more people listen to it. That means the more Australians we can get, hopefully making better investment choices. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to refinance your loan for a better rate? Maybe you're considering releasing equity to grow your portfolio or struggling to find a lender that can meet your needs. Finny is the investment finance specialist that has the solution. With access to over 70 lenders, Finny can track down the financing solution you need. We specialize in investment property finance, and we only deal with lenders that have the right solutions for investors just like you. So you're in safe hands. Fast-track your investment strategy today. Visit finny.com.au for more information.